So what is fundamental and technical analysis? In this video, I'm going to go over some basics of both with the idea of giving you enough information so you can choose which one's going to work best for you. Hey, how's it going? On this channel, we talk about stocks and options with the idea of allowing you to maintain a full-time job or trade as a full-time job. So if you're new here, consider subscribing. And today we're discussing fundamental versus technical analysis. So to give a quick overview of both, first starting with fundamental analysis. Fundamental analysis is looking at assets of the company, liabilities, and really diving into the balance sheets and cash flow statements of the company. You're looking into the actual finances of the company and seeing really what that tells you the future of the company could be, and will that increase the stock price over time or would that decrease the stock, and based on that, do you think that it would be a company worth investing in that is going to grow in the future? For technical analysis, you're looking at the stock chart of that company. So you're looking at the price fluctuations over a certain time period and really what that indicates to you where the stock is going to go. And this could be on a really short time frame or a really long time frame. So you could use it to predict what the company is going to do in the next few minutes, the next few days, weeks, months, or even years. Along with technical analysis, people will use indicators that will take the price of the stock and put it through certain equations that will output different things. So on here you can see these lines. Those are an indicator called a moving average, and then down here you have other indicators, and that is just things that people use to trade based on what those indicators are doing. An important thing to realize before taking a deeper dive into both of these types of analysis is really understanding how a stock is priced and how fluctuations of that stock price and valuation of that company change. Really, when it comes down to it, the value of a stock is really just based on what the next person is willing to pay for it. And so theoretically, a stock could be valued at $10 billion, and then the next day, if nobody wanted to buy it except at maybe $1 a share, putting the valuation of that company at just $1 million, the valuation of that company would drop all the way to $1 million. Of course, really that's not going to happen, but I think it's important to understand that even through knowing all the fundamentals and technicals of a stock, it really comes down to the emotions of what someone is willing to pay for that stock. Those emotions cause cycles in the market, and this is really what it can look like. You can see down here, this is really the stock market from 95 to 2010, and they make a cycle, and that's because companies can be valued at greater and greater, but people start to pile on more and more money than really the valuation of the company is. So the stock price can be valued really higher than what the company should be valued at. And so that's the greed part. And then the fear comes in when either some huge news comes out, or really just people decide, well, I don't want to own this at this price anymore. I think it's overvalued. And so people start to sell. And this causes a cascading effect because fear really drives the market a lot faster than greed, because people do not want to lose their money. As you can see on these two drops here, these two times where the market sells off, and especially in this 08 crash, it's a lot sharper drawdown than the trends up. And that's because really fear tends to make people panic and sell everything without really thinking about it. A big point on where fundamental and technical analysis really butt heads is in company earnings reports. And this happens every quarter of the year because companies are forced to be fully transparent with everything going on in the company because they are publicly traded. And I really think these earnings can really show you that stock prices are really based on emotions and not necessarily what the fundamentals of a company are. As an example, let's look at this Google's earnings report and what effect it had on the stock price. For this earnings, analysts estimated that they would be getting $9.3 per share. And when Google reported earnings, they actually got 9.9 earnings per share. And so this is actually a surprise, and generally this would mean it was a surprise in the positive because they got more earnings per share than was predicted. And generally what that does is it should cause the stock price to go up because the stock is doing better than people thought. But in this instance, you can see based on this huge red candle, that means that the stock price went down quite a bit. And that can be for a ton of reasons. One of them could be that people thought that the stock was going to do way better than the predictions thought, and this just wasn't good enough for people's expectations. Or that the company came out with some news that people really weren't expecting, and this could cause the price to fall, even though the company is doing really strong and really better than people may have thought. And a big thing of this is, even though the fundamentals of the stock show that Google is doing really well and really strong company, that people still wanted to sell instead of buy with all that news. So when it really comes down to which one you want to choose, either fundamental or technical analysis, a lot of it depends on what your goals are or what kind of time frame you're trying to trade in. If you're trying to be a long-term investor, fundamental analysis might be a little better for you, and if you want to be a short-term investor, technical analysis might be a little better for you. But the two major differences between them is, which one do you want to do? Do you want to be more of looking at stock charts or looking at fundamentals of a company and trying to take a deeper dive into a company and really try and predict or understand what that company is doing and what that means for the future? You can make money doing fundamental or technical analysis. It's just more about what your preference is and what you would rather do. It's a lot better to follow what you want to do or what works easier for you instead of maybe what someone else tells you to do or what someone else says that is the better way, because really they both work perfectly fine. It just depends what you want to get out of investing or trading. If you want to learn more about trading and investing in the stock market, make sure to subscribe. And let me know in the comments below which you like better, fundamental or technical analysis. I'll see you in the next video.